I'm Brandi Snowden, and I'm here with George Ratiu, and we're both from NAR Research. And earlier this week, the third quarter commercial real estate outlook was released. So George, what does this report cover?
Well, we focus on both macroeconomic factors. So we look at employment, the gross domestic product, wages, and we also look, more importantly, at commercial real estate and the impact on those markets from economic conditions. And then we split the report into leasing fundamentals and investment sales. And we'll do an analysis of both by large markets as well as small markets, because we've learned a lot of our members are active in both large markets and large transactions, but even more so for a lot of them in secondary, tertiary markets at the smaller end of the deal.
So, were there any highlights that stood out this quarter?
There were several. For one, we were able to compare vacancy rates as well as rents in large markets as well as small markets. And through the recovery of the past few years, those two markets have behaved quite a bit differently. Larger markets entered the recession quicker but came out quicker. Smaller markets took a while to get in but have taken a while to recover. We're seeing a convergence of vacancy rates and rents. There was one important highlight which I was happy to notice because it shows broader based recovery in the market.
So what does the rest of the year look like?
Well, we are looking right now, obviously, at a lot of volatility. Everything from stock market volatility over the last few days to people still trying to guess what the Federal Reserve will do this coming month to interest rates. So among that volatility, one thing that we have noticed is commercial real estate has performed steadily, in large part because the fundamentals, so in terms of employment, in terms of investment and capital in the market, we've had strong growth this year. So we expect leasing activity to continue well into the second half. And we also forecast sales to remain upbeat to the tune of probably cresting $500 billion overall in the U.S. for the year ahead, which is good news.
Great, thank you, George. So we'll post the full report right after this.